Now that the VIX is now trading within the range, how much longer is the VIX going to stay here? How much higher does the market in general have to go? And are we going to get an abrupt, aggressive bounce out of the VIX soon? Market pulled back over the weekend, led to a bounce, as I expected it would occur. Apple, new all-time highs. As I was also expecting that would occur, right? So in today's video, we're going to take a look at the large tech stocks, the SP500, the NASDAQ, the VIX, the crypto markets, and the VIX, put everything all together so that we can see what the next steps are for the market and figure out how much higher everything could end up going. Clearly, this is very, very bullish. This is a very bullish situation out of the market as a whole. It was never really the time to be completely bearish. I was extremely bullish this entire time here, and it looks like in the next coming weeks, that is going to be a continuing theme. So in today's video, we're going to take a look at all of these things. Let's get started. First and foremost, this is a chart of the QQQ. We can clearly see the QQQ is holding above 615, 617 area. That was a very major level of resistance. This was also extremely relevant because it was the 618% fib from the most recent highs to the most recent lows. This was a very, very major level. And essentially, as we gapped up into this level on Friday, it allowed me to understand this would be a perfect opportunity for people to lean short. That's exactly what ended up happening over the weekend. We had a 1% drop to the downside, and I explained the drop that we get is going to be an amazing buying opportunity. And look at what ended up happening. We rose from 613 to 623 today. That is about a $10 move to the upside in 2 days on the NASDAQ. And it was purely based off of price action of what we're looking at day to day. Regardless of what we think can occur in the market, obviously we are overall bullish. But if there are good opportunities to the downside, as there just was, we have to take it because we are leaving money on the table if we only trade one direction. So what we want to do is continue to make as many good, high quality trades as we possibly can. We were long the overall market from the lows. Now we're at the highs, and we're almost, percentage-wise, we are about 2.5% away from all-time highs on the NASDAQ, which is astounding. This, many people thought would be a bear market rally. They were saying it would be a bear market rally as we approached the 605 area. Now we are almost at 625. So this just goes to show how strong of a bounce this was in the overall market. When we zoom out, let's just take a look at it on the NASDAQ, on the NQ. When you zoom out, this does look like a decent sized pullback, right? Compared to what we saw for the past 2 years. This was a really decent-sized pullback. Obviously, April and March was a bit more strong, but these were all somewhat 5 to 7% drops. So the fact that we had another one just recently from all-time highs was great, So this was an amazing opportunity to lean long, and that's exactly what we ended up doing. And now the market is essentially almost a V-shaped recovery back to major levels of resistance, and it's creating a bull flag. So the NASDAQ is amazing. Being long was the play. There's so much opportunity, so much money to be made in regards to investing long-term in the AI-related stocks, into the AI infrastructure-related stocks, tech stocks in general, that all require tons of chips. And according to Moore's law essentially explains that the amount of transistors in a computer, they double every 2 years. So with Moore's law, transistors, with all of the infrastructure, with the technology, etc., the computing power exponentially increases, which is why trading and investing in the NASDAQ long term is one of the easiest trades and one of the easiest biases that you can have. And this has just been working out really, really phenomenally. And that's why you're seeing companies, all of the largest major companies in the world are all tech related. They all are investing in AI or AI infrastructure. So this is going to most likely continue to rally in the next coming months. Q1, Q2 of 2026 is going to have a continued bullish move. By Q3, Q4, towards the end of 2026 into 2027, I believe, is when the market is finally going to get a bit of a decent sized pullback, maybe in the 10 to 15% range. But even then, right, if you are a bear, right, even then, say for example, we hit 30K, a 15, 20% drop is basically bringing us back to where we are right now. So does it really make sense to remain bearish for the next 2 years? Absolutely not. This is an amazing opportunity to just continue to buy dips. Longer term, that's the way that you really have to play it. Unless there are really, really beautiful, clear signs to start leaning short, as we have caught before, where we end up going short at the tops. Until we get something like that, going long into weakness is the play. So that's that for the NASDAQ. It still definitely looks really, really bullish. There's still a lot of upside potential regardless in the NASDAQ. So there, especially above 25,200, clear as day strength. So there's a lot of upside potential. It looks like it really wants all-time highs in the next coming weeks. This is a daily time frame of the S&P 500, the ES futures, right? So this essentially is also showing a lot of strength above 6,800. The fact that yesterday I was explaining how 6,800 was a very important level of support that we held very well, and it just bounced off of that, really goes to show how strong the overall market is and how strong tech was today. Tech essentially broke into new highs comparatively to where the S&P 500 is. And it just goes to show that tech is basically catching up to the overall strength that the Russell 2000 had. Okay, so right now, what's currently going on in the market is that the S&P 500 is influenced by two things. It's influenced by the NASDAQ, and it's also influenced by the Russell 2000. When the Russell 2000 and the NASDAQ both do well, the S&P 500 does phenomenally. But on days like today, for example, when the NASDAQ was up 0.78%, but the Russell was down 0.2%, that's what caused the S&P 500 to only be up a very small amount. And when we take a look at the Russell 2000, we can clearly see the Russell is red, right? It had a red day. Comparatively to where the S&P 500 and the NASDAQ were, the NASDAQ made new highs, right? And the S&P 500 is trading right here. But the Russell is essentially showing some weakness, making a bit of new lows. And this is completely normal because when we're looking at where the Russell is in terms of the most recent highs to the most recent lows, the Russell stopped right at the 786% fib, and it pulled back a bit, which is completely normal. That is completely okay. How much percentage are we away from the all-time highs? We were also about 2.5% away a couple of days ago on the Russell. Right now, we are about 3.5% away. So this is really maybe like a couple of days away. Like, for the market to move 3%, it doesn't take that much. It's literally, it could happen in a week. It could happen in a couple of days. So that is why trying to be bearish all throughout here Made absolutely no sense because there was so much buying pressure and upside potential, and it was so much easier to just lean long. Many people, because they were extremely vigorously bearish, remained bearish. After a huge move to the downside, after an 8%, 9% drop on the NASDAQ, for example, we dropped 11% almost, right? After an 11% drop, people remained bearish, which didn't make any sense to me. So what people ended up doing was after every level of resistance, they continued to go short. And what ended up happening every single time the market gave a good shorting opportunity, it ended up making new highs. So now is essentially where the Russell is starting to pull back a bit. And now we need to see if, on the IWM, for example, the 244 and the 242 levels can hold as support. So that is really the main thing right now. And it makes sense that we are getting a bit of a pullback after such a strong move to the upside. It's okay. The overall large tech stocks are still doing really, really well.
Yeah, boy.
A lot of these stocks that we just saw so far, the SP500, the NASDAQ, and the Russell 2000, are all consolidating at levels of resistance. This is completely okay. Not a bearish sign whatsoever. This is completely normal. This is where you would end up in a day trade. This is where you would end up going long for a continued move to the upside. This is not something where you would start, oh my goodness, this is a bearish sign. We're going to heavily short. No. The momentum is clearly bullish. You wait for opportunities to add to your longs, and that's it. That's what currently is going on, in my opinion, on the market. If something does change, and there is a large event in the market at this point that causes a liquidity scare or some sort of a monstrous pullback in the making, we're going to play that to the downside also. So right now, what we're looking at on paper right now is things look pretty decent. To get a better understanding of why things look kind of decent, we're going to take a look at the large tech stocks. The large tech stocks are going to give a much better, clearer indication of which direction the overall market is going to go because they have such a strong weight in terms of the dollar value of the overall market. All right, so first off, let's go ahead and take a look at Apple. So this is a daily time frame of Apple. We went long Apple down here at 266, 267. We're at 286 now. When Apple was holding this level of support and it was consolidating in this range, we went long at the lower level of this range. Very simple. Risk to reward was very, very high. Apple is a huge player in the market. This was a bull flag. Bull flags tend to break to the upside, and now we are doing exactly that. For us to have been bearish on the overall market when Apple was holding firm, Apple was holding very, very firm. Okay? We just looked at the overall market. The overall market was dropping 7, 8, 10%. But Apple was doing very well. What did this tell us? This told us that the move to the downside in the market was not going to be sustainable. That's exactly what ended up happening. That's exactly why we ended up leaning long, buying dips very aggressively. So it worked out phenomenally. Right now, Apple is holding 284. Clear as day, we are now starting to get above the upper level of the Bollinger Band on Apple. This is not always the best sign because this shows extreme overextension to the upside. And when we are trading very extremely in either direction, there is a good inclination that the price of Apple or the stock wants to return back into the Bollinger Bands. So for example, right now, Apple is trading outside of the upper level of the Bollinger Band. You can see the Bollinger Band is right here. Apple is going to want to return back into the mean. The mean price is the price of the Bollinger Band. All this is showing right now, all the Bollinger Band is it shows 2 standard deviations to the upside and 2 standard deviations away from the downside from this orange line right here. This orange line is simply the 20 exponential moving average for the past 20 days. So if you have a 2 standard deviations to the upside, you get this upper level of the Bollinger Band and then the lower level. When you're trading outside of either, it becomes very, very overextended. And when things are very, very overextended, the price wants to return back inside. That is purely what's going on with Apple. Now is definitely not the time to become extremely bullish on Apple because we are now algorithmically overextended to the upside. Is this bearish though? No. But does this warrant some safety? Yes, because we do not want to enter longs when the market is this overextended to the upside, but we also don't really want to enter short. So with that being said, there could be a bit of a pause or a bit of a pullback and consolidation in Apple. Keep that in mind. This is a daily time frame of Amazon. We went long Amazon down here at 217, 218. We were hoping that he wasn't on the files, that Bezos wasn't on the files. It seems like that's not really affecting anything right now. And Amazon held 230 like a champ, which was a very, very major level of resistance to the upside. We hit that. We held 230. And we really shot up today to almost 240. So this shows quite a bullish move, okay? Obviously, this sort of candle, this large wick to the upside, as well as a hangman, this is not exactly a very, very bullish sort of candle that you want to see, right? But by all means, to really become bearish on this sort of price action doesn't really make that much sense because as long as 230 can hold a support, the uptrend is still prevalent and it's still really, really strong in general. So yes, this was not a really great sign that we wicked off of 240, but it's an amazing sign that we are still trading above 230. So now we are in a bit of a range here between 230 and 240, 238 level, right? So we're just going to have to wait and see how the market responds, how Amazon responds getting closer to this level of support, and if it's going to just continue to bounce. But right now, what we're seeing so far is Apple and Amazon are both showing a bit of a pause or at a spot where things might not continue as strongly. This is a daily time frame of Tesla. This is essentially the same concept. We're getting a bit of a pausing candle, a bit of a red pause candle at the highs here. And it can either go, we're holding above 424, which is a very major level of support. We're holding above 420, also major support. But what's happening? We had a huge move off the lows. And now we're hitting a major level of resistance at around the 430 area. That's why we got this indecision sort of candle here. So it makes sense that the market wants to pause here. It makes sense that we might get a bit of indecision, some consolidation, maybe even a bit of a pullback. And that is completely okay. Because once again, in my opinion, all of these dips are good buying opportunities until proven otherwise. If we can hold above 428, this is going to see 440, 450. This is going to end up really skyrocketing to 470 probably by the end of the year if we can hold 430 to 435. Because if we can do that, and then if we break above 440, the move to the upside can really, really multiply. Because Tesla is one of the losers right now. And Tesla and Apple generally move in unison. The fact that Tesla is so much underperforming compared to what Apple is doing is a really, really interesting sign, in my opinion. And I really want to remain bullish on Tesla. This is a really amazing, awesome opportunity to just remain bullish. All right, this is a daily time frame of Google. Holding 315, obviously skyrocketed up to the upside. Similar concept to Apple. We were holding this major level of support on Google. We were consolidating very well, and it ended up ripping to the upside after making a bull flag. Same exact setup as Apple. Apple and Google doing the exact same thing was a clear-cut indication to remain bullish on the overall market. Because you don't want to be bearish on the market when Google, when Apple are making new all-time highs. And that really, really helped us remain bullish and remain clear-cut regardless of the fear-mongering, regardless of the emotions that come with seeing your portfolio red, it remained a very strong indication to lean long. And that's exactly what ended up happening. Google is still holding 315. Obviously, we're showing a bit of resistance at 330, but that's completely normal. Look at how much we jumped in the past 2 weeks. That's okay. So as long as even 305, 300 can hold on Google, we could fill this whole gap to the downside. And this whole situation would still be bullish on Google. So keep that in mind. Regardless, right now, pragmatically, this is another stock that is showing a bit of consolidation. Tesla, Amazon, all showing a bit of consolidation. Apple showing overextension to the upside. All right, this is a daily time frame of Microsoft. Clear as day. A bit of resistance. Do I want to become bearish after a move like this from the downside? Obviously not. But 490, very, very simple. This is literally textbook prior support is now current resistance. We're showing resistance at the prior level of support where we initially broke down from. This makes complete sense. This is beautiful price action out of the markets. So once again, I'm expecting maybe some weakness, maybe a bit of a pullback, but who cares? Honestly, it doesn't matter. Every single dip that we're going to get is a buying opportunity, and especially out of Microsoft. Now, we're showing a bit of resistance at a prior level of support. That's been the case for a lot of these tech stocks that we're seeing. Tesla, Amazon, Microsoft, Apple very overextended, Google consolidating at resistance as well, and now Microsoft. So that's okay. And to really wrap it up, we're going to take a look at Meta because we didn't look at it yesterday. Meta is doing really, really well. Meta is still doing very, very well. One of the main winners from down here, holding support. As Meta was holding support so well at the 580 level, as Apple was holding support so well, as Google was holding support so well, this really led us to remain bullish on the overall market. And now Meta is really bouncing very aggressively, which was once one of the main losers, is now one of the stronger stocks here off of this low. Meta is up almost 10%, 11% off the lows, which is a huge move. And that is very, very good for the overall market. Now, we are showing some resistance at 650. That's okay. Do I want to be bearish up here? Absolutely not. But we could get a bit of a pullback to around 630 to 620. Overall, really bullish still, as long as we remain above these zones. And it looks like, in my opinion, we might end up doing that. Next, let's take a look at the chips. NVIDIA broke and closed above 180. Very, very important that it wanted to do that. And now we can see that it is really trying to hold above 180. NVIDIA and AMD are both really, really trying to continue to make new highs. But NVIDIA posted a large wick to the upside, and AMD posted a large red candle today. So they're both showing a bit of resistance. But what's most interesting is when you look at the semiconductor ETF, the SMH, really did very, very well. So the fact that it is doing this well, it's showing a lot of strength still. It looks very, very similar to the chart of the NASDAQ. This is a very good sign for the overall tech stocks and AI-related stocks. Even if NVIDIA and AMD are showing weakness, the fact that the SMH is doing so well is a good beacon of light, essentially, to remain long and remain bullish on NVIDIA and AMD, in my opinion. That's what's currently going on. And last but not least, let's go ahead and take a look at the chart of the VIX. Now, the VIX is very, very important because it has an inverse relationship to the S&P 500, which is the overall stock market, okay? So what we're seeing right now is the VIX is starting to slow down and consolidate at a level of support here. As the VIX starts to really slow down and not do too much, if the VIX can slowly continue to break lower, and it can consolidate more, and it can break lower, right? That is going to be extremely, extremely bullish for the market.
Awesome!
Even if the VIX slows down, if the VIX even consolidates, that's bullish. So what we're seeing right now is the VIX was red today. Because the VIX was red, that led to a bounce in the overall market. If the VIX continues to break lower, or it just continues to range bound trade, that is very bullish for the overall market. Now, if the VIX ends up bouncing, off of the 16 to 1650 level of support, what occurs when a stock bounces? What occurs when the VIX bounces? If the VIX bounces, then the overall market is going to end up dropping. Currently, what we're looking at is weakness and consolidation at support. That is what's causing. That is a big reason why the large stocks and the S&P 500 in general is continuing to rally. If you also notice, the price of the option contracts themselves from the same-day expiration contracts are much cheaper. The reason for that is because the implied volatility, the VIX, is falling, and the VIX is much lower. When the VIX is trading above $20 to $25, that's why last week or 2 weeks ago, the contracts of the S&P 500 and the NASDAQ for the same-day expiration were $2.80 to $3. Right now, those same contracts are around $1 to $1.20. And that's purely based on the VIX dropping. So now that the VIX contracts are much cheaper, now that the VIX is now trading within the range, how much longer is the VIX going to stay here? How much higher does the market in general have to go? And are we going to get an abrupt, aggressive bounce out of the VIX soon? A lot of questions still need to be answered, but for now, what we're seeing as a whole out of these large tech stocks is they are, for the majority of them, they're showing resistance or they're showing extreme overextension. All of them are showing strength. But just keep that in mind. A lot of these stocks are now showing signs of a bit of resistance, pragmatically speaking. To wrap it up, let's take a look at the crypto markets. So Bitcoin obviously had a massive rally from yesterday's weakness. The fact that the overall crypto market is doing well is good for the overall market, the stock market. We held 86,000 on Bitcoin, and we ripped in one day almost back above 92,000. This is a really, really strong bullish sign for the stock market, the fact that Bitcoin is doing this. When you look at Ethereum held 27,000 and it ripped above 3,000. Also, clear cut, very, very bullish situation on Ethereum here. Lots of upside potential in the crypto markets. And then the last one, Solana, completely ripped above yesterday's high. The past 3 days in a row, we are back at around Friday's trading price. So this is very, very bullish. We're almost above 140 on Solana, up almost 10% today. Ethereum's up almost 8%, and Bitcoin's up almost 6%. These are really, really strong situations out of crypto. The overall stock market is showing a lot of strength as well. The crypto market is showing a lot of strength. Large tech stocks are showing strength, but also hitting resistance, and the VIX is at support. The market is at a very, very important spot right now. We went long on the market at such an amazing opportunity because making a new trade right now. All right, so let's just go and take a mock trade out of Apple right now. What do we do here? What are we supposed to do with Apple this far overextended to the upside? Does this make sense to enter a new trade up here? Absolutely not. With Google, what do we do with Google? Does this make sense to go short, or does it make sense to go long? Because we're at an all-time high. It's showing a bit of weakness at an all-time high. Doesn't it technically make sense to go short? Absolutely. But doesn't it also technically make sense to go long? Absolutely. So in a situation right now where Google can be a 50-50. How screwed are we if to take a new trade? Amazon hit a major level of resistance, but we're trading above a level of support. It can go either way, right? It can go either way, but the upside potential on Amazon is much stronger. So I would say if you were to enter a trade right now on Amazon, there's like a 60% chance that will end up rising and a 40% chance that will retest back to 230. The odds are not really in your favor in the short term, which is why we executed these trades so well when there was extreme weakness on Amazon, on Apple, Tesla, NVDA. When all of these stocks were really, really weak, that's when we ended up entering long. Right now, up here, we don't need to deal with all of this nonsense. There's going to always be a bit of choppiness. There's going to always be a bit of nonsense up here. That's okay, because you don't want to really enter into new positions up here. Up here is when you sit back, relax, take profits, look for your new setups, and look to add to your positions. That's what we're doing right now. Now is not the time. We were long on the Qs. Down here, we got into 595 calls. The QQQ is at 622 now. We got into 665 calls on the SPY. We're at 682 now. We went long down here. Up here, when things start to consolidate and show a bit of weakness, is not the time where you want to aggressively start entering long. And with that being said, the overall market is at a really, really interesting spot. And it's been a pleasure to make these videos. If you guys enjoyed, please make sure to like, comment, subscribe, do all that good stuff. And I will be on the live tomorrow morning in the Discord channel. Take care. Have a good one.